Hi, everybody. This is Crypto Rich, working with you to get rich with crypto, filling our pockets with crypto profits. And in this video, I have some really, really exciting news about a really, really exciting new project right in at the beginning, part of the Cosmo ecosystem. And we're going to be finding out all about that.
Take the first step towards online privacy. Get NordVPN.
Apollo had produced the ultimate hardware wallet for your cryptocurrency assets, probably the most secure hardware wallet going. Use my affiliate link and the code for a discount. Please follow me on Twitter and join my official Telegram announcements channel. Also, please follow me on BitTube.video. You can also follow me on Odyssey. These are both censorship-resistant platforms, and every now and then I am going to post a video which isn't going to be on YouTube. Hi, good morning, Siddharth, and good morning, Abhishek. But Siddharth, do you want to wave so we know it's you? That's Siddharth.
Good morning.
Abhishek, good morning. Actually, it's good afternoon where you are. It's morning where I am. You are the COO and the CEO and co-founders, both co-founders of Comdex, Comdex.one. I'll have all the links in the description below. And by the way, if you're watching this and you have subscribed, please check that you are still subscribed, because YouTube's been doing something funny for years on my channel. So please check that you're still subscribed. If you haven't subscribed, please do subscribe. Please comment, like, give me a ticker symbol of your favorite cryptocurrency as one of the comments. That's absolutely fine, because that helps my channel grow. And if you're watching this on YouTube, come over to one of the censorship-resistant platforms like Odyssey or BitTube or 3Speak, and you can find my work there as well. Okay, good morning, good afternoon. And let's start with, what do you do? And who do you do, and what is Comdex?
Thank you, Rich. Thank you for having us. So I'm Siddharth, co-founder and COO of Comdex. And Comdex is a decentralized synthetics protocol on the Cosmos ecosystem. With Comdex, users can create and trade commodity synthetic assets. Excited to have this discussion with you and get into the depths of what we're doing at Comdex. Thank you for having us.
You're so welcome. And Siddharth, Abhishek, anything you want to add to that?
No, I mean, it's of course we're building the synthetics platform, on Cosmos, and really great to have be with you here, Rich. Any specific questions, we'll take it along the way.
Great, thank you. Okay, so it's a part of the Cosmos ecosystem. It's a trading platform for synthetic assets. Now, my background, as you know, isn't finances. I work part-time as a child protection social worker, and one of the things I've been trying to get my head around is, what is a synthetic asset? Because there's some things, I can understand Bitcoin, I can understand gold, I can understand the Indian rupee and the US dollar, but what is a synthetic asset?
So I'll take this one. So synthetic asset is basically a derivative. You see futures of stocks or BTC or any other derivative of anything which is of a derivative nature, which doesn't have its own price in general or any value in general. It derives its values from other assets. In our case, commodity assets in Bitcoin future, BTC. So a synthetic is an asset that you create, which only is going to mimic the price. So let's say, for example, if you owned a future of a stock, you're not going to get dividend, but you're going to get the similar return when you're buying or selling it, or almost similar returns. So a synthetic asset is basically a derivative. And a derivative is what you use to take price exposure without worrying about the underlying.
Okay, so is it like so let's use gold as a commodity. So there's a kilo of gold. There's a contract for delivery of the kilo of gold in a month's time. So now we've got a paper representation of the gold, and then the synthetic asset is the token that represents the contract.
That's right. That's correct.
And then people can trade the synthetic asset.
That's correct.
That's correct.
Okay, but isn't there a danger in that? Because you can have infinite rehypothecation or something, like you already do with gold and silver, which is why the price doesn't go up. But you could, I can have 1 kilo of gold, create 100 certificates for that same 1 kilo of gold, and then create many assets, tokens for those contracts. So I could maybe have 1,000 contracts that represent that 100 contracts.
That is correct. So what happens is, instead of using physical contracts, you create a CDP on-chain so that each gold that is minted, you can identify which asset is backing it. So CDP is a collateralized debt position. So you bring on all the Cosmos-based assets through IBC on the platform, lock them up in a vault, and then you mint the synthetic. So the synthetic is backed not by the actual gold; it's backed by another set of Cosmos assets.
Okay.
So it's not backed by real gold or a real gold contract in general. The price mimics the price of the gold contract. It's not in reality backed by gold. So that is how a synthetic is. Because
Ek minute, yaar. Ek minute. Hold on a second. 1 minute, right? By the way, if you're not familiar with Hindi and Urdu, ek minute yaar means 1 minute, man. Okay. So, and it's not rude either. I wouldn't be rude to my guests. You said something, a commodity derived product, CDP. Did you say? You said something like that?
A collateralized debt product. A
collateralized debt product. Do either of you have a background in fintech or banking or something?
Yeah,
we've been already in Comdex for the last 2-3 years, so that's sort of background. But Siddharth comes from a very strong background in finance.
Okay, all right. So I want to get my head around this because there are many people watching who don't have their head around banking and stuff. Because that's one of the great things about crypto. It's brought so many people into the world of finance, democratizing finance. So it's not the preserve of Goldman Sachs and central banks. So say a commodity. No, a collateralized debt position. Okay. Correct. So now we got the kilo of gold. We've got the contract that represents the kilo of gold. You've got a token that doesn't track the contract. So that was it. That was too simple. What it tracks is a series of Cosmos assets that track the contract.
No, so I think I'll just correct you there. So how it works is you have the kilo of gold and the contract for that kilo of gold. Then you have the synthetic gold token, which gets its price or fetches its price from the contract from the price of the contract in the real world.
Right.
And the backing or the underlying asset behind the synthetic gold that we have is a range of Cosmos ecosystem assets.
Okay, I got it.
So that's what limits the amount of gold that one can just create on the platform. So you can't have infinite gold being created and traded on the platform. It always has to be backed by some degree of collateral underlying.
Okay, I got it. So I think that, so you got the kilo of gold, the contract certificates that represent the kilo of gold. Then there's the
synthetic asset.
The synthetic token.
Asset that
which is backed by Cosmos.
Tracks the price of the contract. But it's backed by a range of synthetic assets, say, for example, Atom or Persistence or whatever, right? I don't know. So then when I cash this in, when I redeem it, what I get are those tokens.
Yes. When you redeem it, basically, even to mint it in the first place, you bring the Atom in.
Yeah.
And you're able to trade synthetic. So the price of gold, you'll be able to trade with that synthetic. And once you're done with that trading, you get the stable coin back, which is USD. And once you close the whole synthetic position, you get your initial collateral back, the Atom or XPRT. Yeah.
Okay. I got it. Now that is appealing, and then that also prevents rehypothecation, the printing of infinite digital assets, provided the system is open source and secure, and people can see like the chain of custody, if you like. Is that the case with Comdex?
Yes, absolutely. So you can with each account, when you create a CDP, you can see which if the total assets which are in the collateral pool, if it's it should always be greater than whatever is the net value of the synthetic assets on the protocol.
Right. Okay. And then why create this anyway? What is the point of this?
So we started with building the problem that you just mentioned, not in the banking market per se, but let's say in the commodity trading market, where there are bills of lading which people use to transfer commodities to each other on ships. We started building that product, and now it's doing decently well with like 150 million plus trade volume on that. What happens is that was a whole supply chain centric product where you're trying to track where the commodity is changing hands, who owned this after whom, and then finally where did it get consumed. So that was a very supply chain centric product. But then we realized people who want to invest in these commodities, because commodities, historically has been a very safe asset class. and it's almost inflation resistant. Commodities always rise with inflation. And we figured out people want to take exposure to it, and then they don't want to deal with how many times did it change hands or what happened to it. So what you do is you create a representation of that, which just mimics price, and that is what people want to take exposure on, right? People want to just trade the commodity and not worry about delivery of the contract or of the 1 kg of gold. So this was the primary inspiration, and all the traders that used our platform, they wanted some place to hedge their positions as well. So there will be institutional demand down the line, if and when we have derivatives, when we have leverage on the platform as well. So this was the inspiration, right? Because we had to make a product for financing this industry. So we think we are in a unique domain of commodities, and we're building solutions around it, and we think for financing this will be an ideal solution.
Right. Okay. Now I remember I interviewed Tushar, who is the CEO of Persistence, XPRT, and people can find that in the playlist because I've covered XPRT a little bit. And he was talking then at the time of commodity trading. And for people who haven't seen that interview, I just want to go over this. This is my understanding of it as a layperson. So we're going to leave gold because that's far too expensive and it doesn't really move around in ships. It stays in vaults. Yeah. Let's use wheat, Gundam. So there's a ton of wheat that's going from one location and it's ordered to go to another part of the world to be made into flour and bread. And along the way, apart from people buying and selling the wheat as they do as part of the supply chain, there are also people trading, trading the price of the wheat while it's on the ships before it reaches its destination. And that's a very small niche market. I didn't even know that went on. And then what Comdex does, it democratizes the trading of those certificates, the bill of ladling. So it's just imagine it's almost like horse races. There are people by the side of a horse race or whatever, right? Or a cricket match for Indians and Pakistanis here, right? They're placing bets on the side, right? Informally. So while this wheat is traveling around the world, there are these traders placing bets on the price of the wheat as it moves around the world while that game is in progress. Okay, and then what you've done is using the blockchain is to make that process secure because of the way the blockchain operates, and also accessible to way more people. Because I imagine if I wanted to go into that industry, I would need an incredible amount of know-how and an incredible amount of money just to take a position. Okay, anything I've missed there about?
Yeah, I'd just like to add a few numbers. You've covered everything beautifully. I think, you know our first product very well in those regards. So each bill of lading, we were creating real world NFTs, right? Because each bill of lading is a unique token that we have created to represent. And it gets traded, like when it's on the ship, at least 15, 16 times it gets traded. And each of these consignments are not small, right? Yeah, because if you're booking a whole container, you're talking about few million in each trade. So that 1 for 50, 180 million, whatever is the trading volume currently, it's not happened over thousands of trades. It'll hardly be 100 trades that have made 180 million volume. So each size is so huge that a normal retail user cannot expect to go and participate in. So all these supply chain people, they depend heavily on trade financing, and so people like me and you, we cannot directly jump into financing those trades, right? So if you merge both the platforms, that is when a retail user would be able to deploy capital into trade financing debt, which is it's an 1500-year-old industry. So it's it's become so safe. The failure rate is less than 1%. So that is what huge banks, huge corporations like Cargill, that is how they make their money with the better the financing lines you have, the better credit lines you have, the more money people make. And once we open the whole crypto space as a financing space for the industry, I think it will be huge.
That's incredible. And how large is the size of this industry?
It's a $17 trillion industry. It had a 1.8 trillion financing gap, and after COVID, it became 3.4 trillion. So the whole of crypto industry, currently cannot even fulfill that financing gap that exists. So the opportunity is so huge, and I think when crypto becomes a 10, 20 trillion market, that is when we will be able to fulfill these gaps in a few years' time. That is like the overall vision we have.
That is incredible. That is incredible. And I mean, 17 trillion is, 1 trillion is incredibly large. It's a ridiculous amount. And 17 trillion is something else. Oh my gosh. Okay. I had no idea. And it all goes on in the background and people don't know that this is all going on.
And everybody uses all these products that we are talking about, right? Wheat, soybean, palm oil. These are huge commodities. Copper, everything. You see everything around yourself, but you don't know how big it really is.
Okay. All right. Now, I've been watching and observing, because I'm interested in economic and political affairs, like what's happening with the supply chain industry, where you've got containers stuck off California. They're not coming back to China to collect the goods, to deliver them again. You've got energy problems in China and other parts of the world where the manufacturing and production has slowed down. You've got the cost of oil going through the roof. So then how are you going to power these ships to move around the world? All sorts of breakdowns in the supply chain. How is that going to affect this industry?
I think... sorry, yeah, Sid, please take.
No, I think what Abhishek said a few moments earlier is a big testament to that. And prior to the COVID-19 pandemic, the size of the trade finance gap was around 1.5 or 1.8 trillion dollars, and it has gone to 3.4 after. And a large part of what caused this was just the physical restrictions that COVID brought with it, which means people not being able to show up at work, not being able to courier documents on time or get them signed and then physically handed over. Those were the starting points, or you can say the starting roadblocks that set off a chain of massive roadblocks in the industry. I still recall at the peak of the crisis, there were, I think, a couple of months at a stretch where we just didn't hear of any trade volume from any of the clients who we had onboarded, because they weren't able to get any of their processes done, and any of their verifications or anything that they had dependencies on external parties for was all stuck. And that sort of just highlights also the vulnerability in the way this industry works, is that everything is so dependent on manual processes being complete and external parties delivering on time, that you end up having to rely on a very large set of people delivering certain things a certain way to get things done. And that's the nature of the supply chain in general as well. And I think which is where digitization has to play a big role in supply chain. And as Abhishek pointed out a little earlier in the call, but despite being a 1,500-year-old industry, the practices in this industry have not changed for a very long time. So I think it's sort of it's the torches in our hand to sort of start the movement in this industry.
And I think listening to you both, I think the supply chain disruption creates scarcity, which would increase the value of the synthetic assets, because the cost of the commodities is going to go up because of the scarcity. And then also the other reason why it's also going to go up is because there's more fiat chasing a fixed amount of supply. If there's 10 kilos of wheat, 10 tons of wheat on the market, that's all right, a tiny amount, right? We would all starve. But if the amount of fiat that's chasing that increases 10 times, then in nominal terms, but I'm so proud of myself. This is a social worker talking these ways, right? the price of this will go up, and not because it's got rarer, but because
money got cheaper.
Money got cheaper. That's right. And there's more money, and then they're chasing that. Everybody knows this money's going to losing value. So then they're chasing the physical, tangible goods, because they know it's going to cost more the following day and the following month, because money's going to get even cheaper. So then the value of the synthetic assets will also keep pace with the increase in the supply of the fiat and the increase in the demand for the tangible goods. Okay, so this is making more and more sense to me.
Yep, and if you look at just the macroeconomic context of the past 2 years itself, right, the Federal Reserve has printed almost a quarter of the money and supply in the past year itself. It just shows you that money has it's losing value at a very rapid pace. Yeah. And commodities are things that we know have tangible value, are inherently, something that people need and use despite what the macroeconomic circumstances might be. So keeping this in mind, it just sort of, as you described very appropriately now, it just makes sense that if the amount of money chasing a finite number of things increases, then those things need to just become more expensive as time goes on. And that's the bet we've taken with synthetics, right? Because we saw the general macroeconomic environment of the world right now, and we see that investors who invest in equities have this sort of anxiety about investing in markets that are performing well, but not really backed by fundamental data that should deliver that kind of performance. So everyone is sort of in that phase where they're not sure if this is going to last forever, when they should be shifting asset classes. And shifting asset classes is not something that average investors like us, we can just do easily these days in traditional finance at least. But creating something like a synthetics would firstly, just create that avenue for taking exposure to these so-called inflation-resistant asset classes, and also just being able to move, across one asset to the other with ease, as compared to traditional markets. And that's also, I think, part of what we want to build for the investor is this capability or this tool set that they can just use to jump between asset classes based on the macroeconomic times that they're in, and it just sort of creates this all-weather finance portfolio, if you want to call it, that they can follow and monitor.
Okay, and when you say all these different sort of asset classes, you mean different types of commodities that are traded on these ships, right? Because that's what the synthetic asset backs, right? It's on a ship from A going to B, and I can go from wheat to lead to copper to soy.
Correct. So,
yeah, go ahead, Abhishek.
So, I mean, that's where we're beginning. But if you were to apply the same concepts on, so if you talk about fractional ownership, it always becomes a nightmare when you want to do it with real world assets, right? But if you could replicate that in terms of exposure, let's say you might want to buy a house in the US, but you don't want to live there. You just want to have the price exposure, so you just have some real estate exposure in the country, right? So if there is something like that you want to do, it is again a similar process. You tokenize, and there are so many companies doing tokenization of real world assets. You use that token as the collateral for your CDP, mint a synthetic, and allow people to take exposure to that. And you don't have to worry about who owns the house and what has to be done. That all is the problem of the one tokenizing it. And instead, the users of the synthetics, they just can take exposure down the line. So this is something which we will do with ShipFi or with some time down the line, where all these funds and trade finance debt that they create, they would want to tokenize and enable retailers to also participate in the funding of those commodities as well. So this is why when we say asset classes, of course, commodities is a big domain that we want to stick in for a long time. Unless we feel we have made enough disruption. But once this concept of the synthetic you want to take out and maybe apply it in all kinds of finance, that is when you'll truly realize the power of this derivative markets. Even if you look in the traditional ones, derivative markets are so huge, right? Multiple times of the spot market there. So that is when we say asset classes, down the line, it might just be a whole different asset class in finance.
Right. Okay. Now, one thing I want to ask you that I believe is going on, and I think, and we will get into the tokenomics and the structure of the project and everything, but I'm just laying the foundation for the work that this project does, because it's not you're not creating a simple currency, like an alternative to Bitcoin or Litecoin or Doge or something, or a privacy-focused cryptocurrency. This is something else, right? Okay. So I want to make sure people have got a thorough grounding in this, and I want to make sure I've got one as well. So if I understand it, then fingers crossed, if you're watching this, you'll understand this. Backwardation. So backwardation is when normally if I want to buy a ton of wheat 3 months down the line for delivery, that's more expensive than buying a ton of wheat now. Because in that 3 months, I got to pay for the price of the storage costs and everything, right? Backwardation is when the price now is more expensive than the price in 3 months' time. And that comes about, one of the reasons it comes about, why I think it's coming about now, is people want to exchange their fiat, their worthless, ever-increasing worthless fiat for tangible goods now. Like it's happening, I suppose, ordinary people are, say, buying up lots of washing up liquid now because they know in 3 months' time, 6 months' time, it's going to be way more expensive. It might not even be available. So then the large traders are also doing that, not necessarily with washing up liquid, but say with wheat or soy. So if we have backwardation in place, and I understand there's backwardation in every single commodities market currently, apart from gold and silver, and that's because of well, that's a whole other issue to do with rehypothecation and squashing the price of real money. How will that affect these synthetic assets? Because I'm going to buy at an inflated price now, but in the future it's going to be cheaper because of the backwardation, which is upside down world like negative interest rates. unless I suppose this, I mean, I think this is going to be a prolonged situation, that come to 3 months' time, it's going to be more expensive than 3 months down the line or something. Is that, how will backwardation affect these assets?
So it's okay. Yeah, go on.
Yeah. So I mean, I was just thinking. I mean, while you were describing the example, the first example, I mean, the first answer that came to my head about how this would affect a platform like ours is, if I know that something is more expensive today and I know that it's going to be less expensive in the future, the best thing I can do is take a short position on whatever that asset is. So how I would do that, let's say on Comdex, is I can create gold on Comdex, and how I would do that is lock up X amount of Atom or X amount of XPRT into a vault, and then mint gold as a debt against that collateral. And now I can sell this gold today in the market at whatever the present price of the market is, and hoard those dollars with me until the date when the price of gold falls. And when the price of gold does fall, I can use these dollars that I've been hoarding to buy back that gold at a cheaper price, and then pay back the debt that I've created for this gold, unlocking my original Atom that I held, and then also having the profit from this short position that I made throughout this time. And the beauty of all this is, if during this time Atom has gone up, a few percentage as well, then I've made money on both fronts. That's the beauty of what we're trying to do for anyone in DeFi.
And people can provide liquidity to the synthetic pool and earn liquidity mining rewards in CMDX tokens also. So it's if something's going down, then you're making money from everywhere.
Okay, so I have to make a couple of comments about your answers there. What a beautiful answer, spoken like true derivative traders and bankers, right? Like holding positions in derivatives of something and then making money along the way. But the difference is, you're not inflating the supply of the money, because it's backed by a real tangible asset. Yeah.
Correct.
Okay. So not quite Goldman Sachs.
Yeah. Not yet.
Not yet. Okay. All right. Now,
never.
The other thing that I liked about your answer, it neatly segues into how this platform will work. So at the point of entry, so here I am, I've got some Atom. Well, actually, before I have to say, why did you choose Cosmos? Why didn't you choose Ethereum, which has a much, much larger user base, billions and billions of dollars locked up in Ethereum, and thousands and thousands of dApps and loads, I don't know how many millions of people using Ethereum. And it has the advantage of slow transaction times and really high gas fees and times when nothing moves. What's wrong with that?
Question.
Absolutely. That's a great question. So, I mean, apart from all the advantages that you mentioned, we had, once we started the supply chain product, it had a lot of details, right? So if that means the size of the token was becoming too big, so the gas fees would have been insane. I mean, imagine minting the kind of gas fees when you're minting NFTs. If we have that for each commodity that we are minting, it will be huge, right? And then, of course, with that experience, we wanted to continue building in Cosmos, because it's the place we've been building for so long.
Yes.
And that is why we stuck to Cosmos. Certainly, when scaling solutions come out, it might be a different. And I'm still waiting for the POS launch for Ethereum 2.0. Of course, it's been running for a year, but then it's still not there yet. So once that happens, I think we'll see. If there is again reshuffling of things that people do, but then we are totally bullish on Cosmos in general.
Yes. Yes. Well, thank you so much, and forgive my cheeky question, right? I mean, why wouldn't you want to pay more and have it really slow? Because I've looked at doing some DeFi transactions on the Ethereum blockchain, and then I look at the gas fee. Well, forget it. I would just go and buy myself some more Osmo and stake that, or put it in a liquidity pool, right? That's what I'll do instead of spending that money on gas fees. And the thing about Ethereum is, I mean, Ethereum's fabulous. It's revolutionary, but we've had the London upgrade, and look at the differences made to gas fees. Hardly any for the small retail investor. And then, if people are watching this and you've not looked at Cosmos, take a look at Cosmos. Take a look at the Osmo DEX, which I just think is beautiful, and all the other projects that are coming out of Cosmos. And the other great advantage is it's right at the beginning. I suppose it might be a little bit like how Google, when Google was good, rode on the shoulders of Alta Vista or Ask Jeeves, or one of those early platforms that made a big difference and revolutionized the internet, but they were just slow and clunky. It's like maybe if Bitcoin is a horse and carriage and Ethereum is a Model T Ford. Cosmos is a Lambo. Cosmos is a Lambo. And I'm not suggesting, by the way, that one atom will equal one Lambo, okay? This is not financial advice. Okay, so and then there isn't, I don't think there's going to be the same scalability issues with the Cosmos ecosystem, because if people don't understand, what you have are separate independent blockchains that are able to communicate with each other. So they're not exerting a load on the foundation layer. Okay, so that's why you chose Cosmos. I understand now. So take me through what would happen. How would I use at point of entry? So I've got my Atom coins, or I've got my Osmo tokens. What would happen?
So at the onset, what you can do initially is, first you can just, there's multiple things you can do. First, you could just collateralize your Atom or Osmo or XPRT, and then mint gold or silver or crude oil in the form of a debt. And now once you've minted it, you can—
Hold on. I want to break it down, right? So collateralize. So what exactly would I do? I'd go to the platform, I'd click on something, I'd lock my Atom or my XPRT into a smart contract. That's what's happening, right? With a few easy to use GUI. And then what happens?
So when you lock in your asset into the smart contract or into the vault that we want to call it, you can then select what asset you want to create by locking up your asset as a collateral.
I want gold. I'd have gold, silver, Bitcoin.
Yeah.
Okay.
So then let's say it's gold, right? You select gold, and then you obviously select the amount that you want to create, to borrow or create from the protocol. And obviously you cannot borrow more than the collateral that you post. And not just more, I don't think you can even borrow as much as collateral as you posted, because we always want to maintain a certain extra amount of collateral on the platform as a buffer for movements of prices of collateral assets or the gold that's also being minted. So in volatile times, the protocol needs to be able to maintain solvency of its debt, which is why it's important that we maintain over-collateralized positions for all the debt that's open on the platform. So going back to your example, what that does is, for the Atom that you posted up as collateral and locked into the vault, you can borrow debt, but only as a certain percentage of the value of the Atom that you locked up into the vault.
Okay. So then I get these gold tokens, these synthetic assets, and they come into my wallet, or they're still on the vault?
They're in your wallet now. You can
use them in my wallet. Okay. Now what do I do with them?
So one thing you can do is trade them. So we'll have our own C-swap, which is the AMM of Comdex for Comdex's synthetic assets. So you can go onto the C-swap and then just trade these gold tokens for other, whether it's silver, oil, or just trading it for money, which is dollars, any stable coin. So that can be done. Another thing you can do is provide liquidity to the pools that facilitate these trades on the C-swap. And that way you can also be earning rewards for providing liquidity to the pools. And then I think, apart from minting, trading, and liquidity provision, I think that's all that you can do in Comdex. Abhishek you can stake your Comdex tokens, of course, but I think Abhishek will get a little more into anything if I missed it out.
Okay.
Yeah. Another part would just be governance. Go on.
Abhishek, before we say, so I can do all of that in C-swap, but I imagine because people could also do that on Osmosis.zone or SIFchain or Emeris, because those are open source platforms once the smart contract, so I could take them and trade them there or something. I imagine that might be possible in the future because of the open source nature.
I mean, it depends, right? If you see all new, or not all new, few products, they face some issues by moving their own synthetic assets outside. So instead, we'll initially start with trading natively on our chain. Right. And depending how things evolve, we will take this call, because obviously we would want our assets to be traded at multiple places, right? Not just the CMDX token, but also the C gold that we will mint. So that is something which we'll have to figure out. And I think with IBC, at least on the Cosmos ecosystem, is going to be very simple. It's just about figuring out how regulations would work, and how if the other platforms would want to even do this kind of thing. And in some ways you don't even want to split the liquidity into multiple places, right? Because then each place has less liquidity and there's more slippage everywhere. So aim should be to concentrate liquidity at least in few places where when trading happens, there is it's a good experience, no slippage. Everyone gets rewarded from the same pool. So it's a different thing. If you split it up, it becomes a bit challenging. Initially, at least. Down the line, with more liquidity in the world, then it should be doable.
Okay, thank you. All right, and then you were going to add something before I interrupted you about how it's going to work on the Comdex?
Yeah. On the platform, Sid covered everything. But just thing is, most of the parameters, we try to make it almost all. Everything is governed by a governance protocol of the protocol. Sorry, governance of the protocol, and that can be done directly from the application, like you see in all the new Cosmos-based DeFi applications. So that will be the whole application.
Why would I want to stake on Comdex and provide liquidity there when there are other platforms that I can do that? What are the nature of the rewards that people are going to get?
So people will get paid in CMDX rewards for providing liquidity. Of course, I know maybe you're coming from Osmosis. Let's say there is an asset that you can create another pool and get Osmo rewards as well. And this is something which we'll find out. It's difficult to comment on it right now. But so it will initially the CMDX token will of course go around and get traded everywhere. As the C assets, the C gold, etc. We'll see how it happens.
Okay, because I think what people are interested in is, one is high returns, plus also security of those high returns. Don't promise me 1,000,000% and then the whole platform crashes and runs off with my money, or there's a rug pull or something, and we'll come to that as well. But I want security, and some people might be happy with a 10% return, knowing that it's fully secure and they're going to get that low risk, low return. So I'd be interested to see how you resolve all that, given that certainly so far the security of the other Cosmos dexes. But,
since we'll be of course getting security audits done before the launch happens on mainnet. But addressing the thing you brought up with a million percent APY, or whatever is becoming the standard in the market right now. Of course, it's challenging. It's not like it's not very straightforward also. And but like Sid mentioned earlier, right? Our aim is to finally offer all-weather DeFi, where the madness of the whole bull run and then the sadness of the bear market, it shouldn't matter, right? Your money should keep working and should keep generating stable returns down the line. And of course, and when it's time, when market times change, it should be easy enough for you to seamlessly change asset classes or change your positions down the line. So I think yes, we will try to offer as much APY as possible for the liquidity mining pools. And I hope it sustains. Long term, I think every project faces those issues. We're trying to implement our option rewards for the liquidity mining instead of just giving out the token. If you see Andre Cronier's post on liquidity mining rewards version 2, so we're trying to look at multiple models, to do this long term instead of just bootstrapping initial liquidity for like a year or so, and then when the rewards go down, the liquidity disappears. So we want there's some kind of stickiness there, and trying to build a model around using options there as well.
Right. Okay. That makes sense. And then I can also see the value of diversifying. So yes, I am staking in liquidity pool mining several different coins and tokens on Osmosis because I'm hedging. It's good to hedge. So I get a lower percentage staking DVPN than I do staking Osmo, but I'm hedging. So it's always smart to hedge. A bit like, I have Monero and I have Pirate Chain. I have Bitcoin and I have Litecoin. All right. Next thing, then you've mentioned this token. Why are you launching a token? What will the token do? And how can I get some?
So like you mentioned earlier, right? Cosmos is all about application specific chains that you have to launch. So the CMDX token will be the native chain, a native token of the chain. And then of course it will be used to give out liquidity mining rewards and any rewards that we want to give out to certain user sets for any actions that they perform. Because even on the enterprise side, sometime down the line, if the number of trades that is happening is reducing, so you want to incentivize people for even doing trades, etc. So whatever generates more volume for the platform. So we have allocated 25% of the whole supply for rewards. We're doing a decent airdrop, 12.5% of the total supply for multiple ecosystems, multiple users. We have a huge community DEF fund of 12.5% again, and that also is over 4 years for people to use. And then the team and the foundation have 25% each, and all of them are with like 3-4 year vesting based on whichever part they fall in. So it's a very long term project. We've already been around for 3 years. So and we're launching sometime early next month, and you will find it in Nexus. Certainly, we'll be doing a lot of announcements. Maybe we'll be speaking to you again soon as well.
Yes.
Post the launch, but the token should be out, early November.
Early November, okay. And now you mentioned airdrops to different Cosmos. Well, you didn't say Cosmos, but I assume Cosmos assets. So which ones in particular?
So we've already announced XPRT airdrop. We have I have in certain interviews already disclosed for Atom. And
by the time this video is out, Atom's announcement would be done. So Atom, as of now, is also officially announced, and Atom holders can check their CMDX airdrops.
Okay. Yes, and shortly, as we are so happy. UST is now IBC enabled, and it kind of makes it like the de facto stable coin of the Cosmos ecosystem, right? And this is what we are super happy about, and we will be doing an airdrop for Luna holders also, because we see UST as a huge integration point for multiple products that we will be building down the line. So there will be an airdrop for Luna stakers as well, and let's hope there are more. Hopefully, Osmosis. That's a very small, very few projects in the Cosmos ecosystem which have stayed long enough.
Yeah.
So you really want to have the initial set of people who've been supporting Cosmos ecosystem in general, to benefit from the airdrop in general.
And then I'll have all the links in the description below, the Telegram group and the website and everything, so people can go and check it out and find out. You may be already holding Atom or XPRT. You may already be holding Luna. You may be, who knows? You might get some crypto dropping into your wallet, which is very, very nice when that happens, especially when it does what Juno and Osmo have done, which, by the way, was how I got into this whole thing, through Osmo. I just happened to hold some Atom. I hardly did any due diligence, bought a little bit of Atom about 18 months ago, and then, oh, this is nice. Let's look into this. Okay. Now, if I want more CDM token, is that what, is it?
CMDX.
CMDX. If I want more CMDX, then are you doing an IDO, or do I got to wait for it to come onto DEXs and then I can purchase it?
No, we'll directly be listing on DEXs, and then of course, since airdrop also, we would expect people to either provide liquidity mining. Of course, there might be some sell pressure initially, but I think it should do really well. From the past, we've done so much work. It should show out in few of our products, and I'm hoping for the best.
And then you said the project's been fully audited, or it's going to be audited. Will those?
No, it is going to be.
It's going to be. And will those audits be publicly available?
Oh, and actually, I mean, what's the point of getting it done? We will be we are actually finishing up parts of our development of the application. We hope to finish up in a couple of weeks, and then as soon as audit gets finished, we will first launch it on testnet for people to try it out. Maybe find vulnerabilities themselves, do a bug bounty on the testnet, and they're giving enough time for the auditors also to complete. As soon as that's done, we will launch it.
Okay, all right. So now, just to get what this Cdmx token does, so it's the native.
CMDX.
Sorry.
CMDX.
CMDX. Sorry. So just to be clear, what the CMDX token does is it's a native token for the entire ecosystem for this. So every transaction, you can use this token, the CMDX token, for payment. Rewards from liquidity mining and also from staking that token are paid out in that token. It's also for voting on governance proposals. And I suppose every single transaction, so then every single synthetic asset, every single trade, and as they grow and grow and grow and grow and grow and grow, then those tokens are in limited supply, then I imagine there's going to be more and more demand for those tokens to pay for transaction fees.
So the token also earns value from trading fee or liquidation fee. So we create a whole fee pool of wherever So let's say there are liquidation events that trigger, right? So we try to create a huge pool of CMDX tokens. What we use this for is, let's say there is a sharp fall in the market, right? We've seen with MakerDAO, Black Thursday, etc. So you need some kind of buffer to always, like I said earlier, the debt of the collateral, the value of the collateral on the protocol should be greater than the debt always, right? So let's say if it tries to, it tries to break that, you use some of the CMDX to, recover part of your debt. And if that pool becomes huge enough, we can burn the token as well to reduce the supply and make it deflationary. So yes, the token should accrue value in multiple places via multiple fees on the platform.
All right, I think we've covered just about everything. I've got a good grounding in this, and anybody who's watching, if you've got any comments or questions about this project, put them in the description below. Give me a ticker symbol for any Atom-based asset that you like, or any other asset. I don't care. I like them all. And go join the Telegram group and go look through the website. I will be covering this again. So make sure that you're fully informed about this project before you decide to participate in it. Siddhartha, Abhishek, is there anything else you want to say or ask before we finish up, or anything you want to let people know?
Sure. I mean, first of all, thank you so much, Rich, for having us. It was a pleasure speaking with you. We've been following your content for a while, and it's great to finally, be sitting here and talking to you.
Thank you.
For those who are watching, super exciting times to be in a super exciting space. We're both excited to, bring a lot of updates that we have coming up in the coming months for you. And I think by the time this video is live, I know that Persistence airdrop has already been announced and the Atom airdrop has been announced. But by the time this video is live, Atom holders will now be able to head over to airdrop.comdex.one to check how much CMDX they won. Details about how to claim the CMDX will be released very soon once the mainnet goes live as well. And I think another exciting news for viewers who are watching, I think they could consider this as like the official announcement that we will be conducting the airdrop for Luna holders and stakers as well. More details will be definitely coming out in the next few days itself. So stay tuned to all our channels, our Twitter and Telegram community, and you'll be first to know when things come out.
Fabulous, thank you. And do you have a date for when the mainnet will go live?
So we're looking at early November, somewhere in the first week itself. We haven't yet fixed the date, but I think first week of November is optimistically what we're looking at for mainnet release.
Very good. Okay, Abhishek, anything for you?
Just covered probably everything very well. So thanks a lot, Rich, for having us here. Like you said, we've been watching your content and really want to have more interactions with you down the line as well.
Thank you both. I really enjoyed it, and I really enjoy how clearly you've explained how this whole other world of fintech and derivatives and stuff, and it's not my natural pull, right? How clearly you've explained it. And I will say again, people, if you have any comments, please subscribe, comment, like, all that business. Go check this out. Personally, I think it's going to be very, very promising, because it's going to ride the wave of the Cosmos ecosystem as that grows, plus bringing simplicity and democratization to an ever-expanding industry, which is the supply chain industry. Thank you. Thank you for watching. Thank you for talking to me. And between now and when I see you next, please keep filling your pockets with crypto profits. This is Crypto Siddharth and Crypto Abhishek and Crypto Rich signing out. All the best. Bye-bye.
Thank you so much.
Thank you.
Bye-bye.